The money in your bank account isn't really there. That's not a metaphor, and it's not a conspiracy theory. If everyone decided to withdraw their cash tomorrow, the entire system would collapse within hours. Why? Because the money doesn't actually exist. This isn't a glitch in the system. This is the system, a centuries-old trick we've been taught to accept as normal. It's called fractional reserve banking, the quiet engine behind global debt, inflation, and the illusion of wealth. To understand it, we have to go back to a time before digital numbers ruled our lives. In medieval Europe, wealth meant gold and silver. The rich kept coins in chests or jewels they could trade, but carrying gold was dangerous, so people began leaving their treasures with goldsmiths, the men who had vaults strong enough to protect them. In return, the goldsmith gave them a receipt, a piece of paper that promised, "Bring this back, and I'll give you your gold." Soon people realized they could trade those notes instead of the metal itself. That's when the trick was born. The goldsmiths noticed something curious. Almost no one came to collect their gold at the same time. So they started issuing more receipts than gold they actually had, lending out claims on gold that didn't exist. They had discovered how to create money out of thin air. Banks were built on this idea, and governments soon joined the game. When the Bank of England was founded in 1694, it didn't serve the people. It served the crown, drowning in war debt. The bank lent money it didn't have, in exchange for interest, repaid not with royal treasure, but with taxes from ordinary citizens. Sound familiar? It should. It's the same mechanism every modern government still uses today. Fast forward to the 21st century. When you deposit $100 in a bank, it doesn't sit there waiting for you. The bank keeps only a tiny fraction and lends the rest. That loan becomes someone else's deposit, which gets loaned again. Your $100 becomes $1,000 in circulation, but only the first 10 actually exist. The rest? Pure debt. Every new dollar is born as someone's promise to pay it back with interest. And here's the twist. That old fractional reserve rule, it's gone. Since 2020, U.S. banks are no longer required to keep any reserves. Zero. Today, what limits them isn't deposits. It's capital and liquidity regulations, written by unelected technocrats meeting in Basel, Switzerland. These rules decide how much risk banks can take, and how far they can stretch the illusion. Modern banks don't lend from deposits anymore. They create loans first, and those loans create deposits. When you take a mortgage, the bank doesn't move money from a vault. It simply types new digits into existence. Over 90% of all money in the modern economy isn't printed by central banks. It's created by commercial banks, the moment someone goes into debt. And that's the key. Our entire financial system runs on confidence, not cash. When people stop believing, or stop paying, the illusion unravels. This design has three inescapable consequences. 1. Inflation. More money is created every day, eroding the value of each dollar. 2. Perpetual debt. Since money is born as a loan, there's always more debt than money to repay it. 3. Concentration of power. The few who control credit, banks, governments, and the wealthy, profit endlessly while everyone else keeps running faster just to stay in place. When the system hiccups, the mask slips. 1929, 2008. Every crisis tells the same story. Too many promises, not enough reality. Each time governments bail out the illusion, because without it, the modern economy would simply stop. And here's the uncomfortable truth. The system cannot afford for you to be debt-free. If everyone paid off their loans tomorrow, the money supply would vanish. You are both the fuel and the collateral. That's why understanding this matters. Because money isn't wealth. Real wealth is land, knowledge, skills, and independence. Things that hold value when paper promises don't. Debt isn't neutral. It's the bloodstream of a machine built to serve those at the top. And inflation? That's not an accident. It's the design. The system survives as long as you keep believing that the digits in your account are real. But the moment confidence fades, the house of cards falls. So the next time you check your balance, remember, most of it exists only as faith. Faith in a system never built for your freedom. If this made you see money differently, hit subscribe. History doesn't just repeat, it whispers. And if you listen closely, you'll start to hear the truth behind every dollar.